This is ShadowQuant, Market Brief, brought to you by AriesLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Friday, July 31, 2026, and this is the New York pre-market. Now, let's get into it. Crypto fear is at extreme lows, yet the S&P 500 is rallying. We are looking at a classic contrarian bounce, but with the VIX spiking and the yen under siege, the market is signaling caution, not celebration. Let's get to the data.
Good morning. Pre-market futures are pointing to a strong open, driven by a broad risk-on rally. The S&P 500, tracked by SPY, is up 1.7% to $741.69. The Nasdaq 100, tracked by QQQ, is leading the charge with a 3.3% gain, sitting at $683.55. The Dow Diamonds is up 1.2% to $521.51. Small caps, the Russell 2000 IWM, are also green, up 1.4% to $292.59.
A clear rotation from defense to offense. Let's see what's driving the corporate flow.
The headline from the crypto sector is mixed. Core Scientific turned lower after fourth quarter results disappointed. Strategy posted an $8.2 billion loss in the second quarter, driven by unrealized losses as Bitcoin slumped. Coinbase's second quarter profit missed estimates despite capturing record crypto market share.
Crypto volatility remains high, but the broader market is focused on macro signals. Let's look at the economic calendar. The macro backdrop is defined by sticky inflation and central bank divergence. In the US, the 2-year Treasury yield is at 4.22%, and the 10-year is at 4.67%. The yield curve, specifically the spread between the 10-year and 2-year, is at plus 0.45 percentage points, which is considered flat and a potential caution signal. So we have a flat yield curve, sticky inflation, and a volatile yen. Let's check the risk desk.
The VIX, the volatility index, closed at 20.66, up 2.45 points from the previous session. This spike in volatility, combined with the crypto fear and greed index at 14 out of 100 indicating extreme fear, suggests that while equities are rallying, the underlying sentiment is fragile. This is a relief rally, not a regime change. Additionally, the stealth intervention in dollar-yen is creating unpredictable swings, adding a layer of geopolitical and policy risk that traders need to monitor closely.
High volatility, extreme fear, and policy uncertainty. Let's wrap up with what to watch.
Here are 3 things to watch today. First, the S&P 500 testing resistance at $742. Can the breadth hold, or will the defensive sectors pull it back? Second, the dollar-yen intervention risk. Any further wild swings in the yen could spill over into broader market volatility. And third, the employment cost index today. If wages are rising, it reinforces the hawkish narrative for the Fed.
If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This is an AI-generated market briefing by ShadowQuant. All information is for educational and informational purposes only. It does not constitute financial advice. Always do your own research before making any investment decisions. That wraps up this edition of ShadowQuant Market Brief. Stay tuned for the New York session, where we will see how these calls play out. Until then, trade safe.